Welcome. This is part 1 of a series of YouTube videos organized by volunteers of Pro Bono Students Canada at the University of Calgary Faculty of Law in cooperation with Canadian Sports Centre Calgary, designed to provide general information to elite amateur athletes when filing their tax return. In this video, we will discuss filing requirements. Every person who is a resident of Canada needs to file taxes. This includes employees, students, retirees, essentially anyone who earns an income in Canada. Other organizations that also need to file an income tax return are corporations and charities, but we don't need to go into more detail about that here. Are you considered a resident of Canada? This determination takes into account the whole picture of an individual's unique situation when attempting to make an assessment regarding residency status. A few examples of the major factors that indicate whether an individual is considered a resident of Canada are: you consider Canada as your home, you keep personal property such as a car or furniture in Canada, or whether you have any social ties to people who live in Canada. For a more exhaustive list, please see the link below. If you consider yourself a non-resident, you may still be considered a deemed resident of Canada. Please see the link below for a list of criteria outlining the circumstances when an individual shall be assessed as a deemed resident by the Canada Revenue Agency. The location of residence is based on which province an individual ordinarily resides in at the end of the taxation year. Or, to put it another way, your location of residence is where you consider your permanent address to be on December 31st. How do you file an income tax return? Well, you can go to an accounting firm or a commercial tax preparation company. You are also able to file your taxes on your own. If you prefer to file taxes on your own, then there are several methods available to you. These are paper, telephone, and electronic. When filing taxes on your own, make sure to complete both the federal and provincial T1 worksheets provided by Canada Revenue Agency. Note that personal tax preparation software is also widely available, and it's often available for little or no cost to you. When filing your income tax return electronically via NetFile, you will need to enter your social insurance number and your date of birth in order to be able to upload the special file. In order to be eligible to file your tax return via Telefile, you have had to have previously filed an income tax return in Canada. Keep in mind that when filing a paper return, you need to transfer all data from information slips to your schedules, complete both the federal and provincial tax calculations, determine how much is owed or is to be refunded to you, then mail your return to the CRA Tax Center. Make sure to include a check or pre-authorized payment with your tax return if you have deemed that you owe money. Otherwise, if you do not pay before the deadlines, you may incur penalties. The reason for filing an income tax return include being eligible for certain tax payments and credits that are only available to individuals who have filed their income tax return, such as GST/HST credit payments, your tax refund, child benefit payments, any one-time provincial payouts that are announced in advance, and finally, in order to accumulate any carry-forward amount for deductions such as tuition tax credits and to add to your RRSP contribution room. There are many benefits to filing your taxes, but the most important one is that it is required by law. The government may automatically assess you if you fail to file your income tax before the deadline. If, in the government's assessment, they determine that there is a difference between the taxes that you are assessed to be liable for and what you may have already contributed to throughout the year, you will be responsible for the balance and any other penalties incurred. Any unpaid balances will attract penalties. The first type of penalty is a late filing penalty, which is 5% of the balance owing plus 1% for each month that passes up to a maximum of 12 months. There are circumstances where the penalty may be waived. For instance, if the lateness was due to circumstances outside the individual's control. However, it is best to avoid this circumstance, as one would have to apply and be granted an exception to the taxpayer fairness provisions. The second type of penalty is failing to report the entirety of income. This penalty consists of 10% of the amount of income that failed to be reported. If the failure was deliberate, one can be issued a penalty of the greater amount of $100 or 50% of the omitted amount. A voluntary disclosure of omitted amount can eliminate any applicable penalties. However, you may only provide voluntary disclosure relief once in your lifetime. You will also be responsible for any interest that accumulates on your unpaid balance and the applicable penalties. If you are unable to pay the full amount owing before the deadline, in order to avoid any interest charges, an individual may register and agree to a payment plan with the Canada Revenue Agency. When is the deadline for filing an income tax return? Generally April 30th of the year following the end of the taxation year, which is January 1st to December 31st. If you are self-employed, you may file your tax return by June 15th. However, if you have any taxes owing, they are due by April 30th. If you file your tax return after April 30th, any credit payments or other benefits may be delayed. For record keeping and accounting information, please see our next video.